Inflation continues to ravage the economy, showing no signs of stopping. Consumers are yet to experience any relief as the Biden administration has made a move that may make things worse for American consumers. Shark Tank panelist Kevin O'Leary gave his perspective on the Build Back Better bill and how it could threaten the US economy. We've covered O'Leary in a previous interview with Yahoo Finance, where he concisely touched on this particular topic. But today, we will be hearing an in-depth analysis on this by Kevin O'Leary himself. Make sure you watch until the end so that you can prepare yourself for the upcoming economic climate. Before we proceed with the video, we'd like to thank you for all the support you've shown our channel. Stay tuned in as we continue to produce informative finance content. Inflation is currently one of the most pressing issues facing the United States economy, yet not everyone agrees on what caused it to spike. The actions of the Federal Reserve have been condemned by certain economists, while others have pointed the finger at supply chain issues. Kevin O'Leary, a venture investor and host of the television show Shark Tank, thinks that the issue is much more extensive. Kevin O'Leary stated that if a person believes that inflation will decrease in the next few months, they are mistaken, as it appears like the Biden administration will inject an additional $600 billion in free money into the market via the Build Back Better framework. According to O'Leary, the United States has already injected $6 trillion in free money into its economy, and as a direct result of this action, inflation has occurred. Inflation would soar much higher if an additional $6 billion were injected. It has been asserted by conservative politicians and economists that the unprecedented levels of inflation that were seen in 2022 were caused by unprecedented levels of government expenditures and stimulus payments. Taxpayers in the United States received more than 472 million stimulus checks worth $803 billion between 2020 and 2021. As a result of the economic downturn caused by the coronavirus. On the other hand, O'Leary has voiced his opposition to the Inflation Reduction Act and warned that pumping more money into an already overheated economy will not end positively for the people of the United States. Because the labor force participation rate is currently 62.2%, a tiny drop from the previous month, he said that the Inflation Reduction Act will not help the United States with the chronic shortage of workers that the country is experiencing. In the United States, there are roughly twice as many job vacancies as unemployed individuals. The most recent information suggests that the Consumer Price Index in the United States has climbed by 9.1% year over year, marking the quickest yearly pace seen since November 1981. And it is anticipated that the July figure will remain around 8.9%. It is therefore important to pay attention to Kevin O'Leary at a time when the market is plagued by worries about inflation. And there are rumors that the Federal Reserve may not suspend the interest rate increases.
When are we going to hit peak inflation, Kevin?
We haven't yet, particularly if this Build Back Better bill prints another $400 to $600 billion and flushes it right into the economy. That's probably not going to be a good outcome for inflation because it's very inflationary, even though it's trying to be labeled as an anti-inflation bill. Anytime you print money, you get inflation. So we'll see what happens. That's got to go through the gauntlet in Washington. That's one factor. The other that's really interesting that has a lot of market watchers really scratching their heads right now because it's never happened before. You've got a situation of full employment that's like 3.4%, and yet at the same time a second quarter of GDP shrinking. That has never happened before. So one way to interpret that is to say the productivity of the 2+ million new workers that have just been booked into the economy must be very, very low. Or maybe they're not really working 8 hours, maybe they're working less, but there's something not working to the traditional model, which is why I think it's giving Powell pause, because he has been jawboning a more dovish Fed, having just done the 75 basis points. Even he doesn't know what's happening here, so he's data dependent. We've never seen this before. Never in the history of the economy in 200 plus years has this ever occurred. So again, another sign that is not fitting with what everybody wants towards this recession.
In this clip, Kevin first called out the Build Back Better bill, which would add another $400 to $600 billion into the economy. He adds that this bill will only exacerbate the inflationary situation in the US. The next point that Kevin O'Leary covers is the very unusual behavior in the market. Kevin notes that the data show that although employment rates are high, the US GDP continued to shrink in the second quarter of 2022. Kevin says something is wrong within the system, causing this unprecedented economic phenomenon. In this next clip, Kevin talks about whether or not the US is already in a recession.
Towards this recession. So I know there's a debate out there of whether we're in it or not. I'm assuming for you, we're not in it yet.
Well, the narrative towards the soft landing has changed so much in the last 8 weeks because just 2 months ago, nobody thought Powell could engineer anything like this.
Yeah.
And here we are. It's very hard to call this a recession when you've got full employment. And so is this working? So at least 50% of the pundits or the market now believes a soft landing is possible. And again, a lesson learned for everybody who thinks they can time the market is, look what happened in July. You've got maybe half of this year's returns came in 4 days. And so if you weren't in the market, you didn't capture that upside. And so it's impossible to time the market. You would have never guessed July would have been a good month, but it was.
Absolutely. And on that point, help us decipher this because like you said, we're getting this relief rally, but is it giving us a false sense of optimism, of hope? What's the truth?
Well, the truth is in the earnings. And so far, everybody was waiting to see earnings completely blow up. Didn't happen. Many companies delivered, even the highly speculative tech companies, and we're more than halfway through earnings season, and it looks pretty good. Now, it's not as good as it was a year ago, but it's nowhere near as bad as everybody was forecasting that we would be in the height of a recession right now, and we're not. And so this is a very difficult time to make a decision between fixed income and equities because, as you mentioned earlier in the show, we've got an inverted yield curve that's generally never good. But again, when you can't tell me why we have full employment, 2.5 million people working, and low productivity, then maybe you want to be a little careful about making more decisions about raising rates or changing policy or raising taxes. They all sound like really bad ideas until you've really figured out the riddle of what's going on in this economy. We don't know.
Exactly.
So my attitude is to stay long equities, continue at a 30% weighting in fixed income. That's very low for me. Usually it's 50%. And just wait and see what happens. My names are high quality names that provide cash flow and distributions. But it doesn't matter what sector you pick.
Kevin O'Leary downplays the situation when asked about whether or not the US is in a recession. He adds that a high employment rate is not an indicator of a recession. Kevin also says that the possibility of a soft landing is highly possible. Kevin also advised everyone against timing the market as it is very challenging, adding that no one knew July would be a good month for stocks. Lastly, Kevin says he would prefer to stay long on stocks and wait and see what happens in the markets and the economy. In this following clip, Kevin gives his opinion of Fed Chair Jerome Powell's performance as Fed Chair.
Everybody likes to beat up the Fed regardless of who's in that seat. But he's been doing a really good job because in my view, because he just doesn't know and doesn't say that he knows what's going to happen next. So he's trying to stay flexible. Rates right now are still at historic lows, even though he's gone through multiple rate hikes. The question is now, what's next? Many people think, well, another one is going to be at 1%. And maybe there'll be an emergency meeting, but I don't think so. He's in the same boat as everybody else trying to figure out where are we in this recession. Is it going to be maybe 2 or 3 quarters of slower growth or no growth? We haven't really called it yet because it's so perplexing to have this much employment. For every job, out there in America that is available, there's a ton of people that don't want it. I mean, you can't hire anybody anymore, which is incredible. And, minimum wages in California, $15 for service providers, maybe in the food industry. You can't get anywhere $15, 21, 22, 23 right now. So the economy is self-adjusting. There is a ton of people that just don't seem to want to go back to work.
Let me ask you this. You say you're long equities. I just want to hone in on some of your other strategies. We know back in March you were 20% in the crypto space. We know how outspoken you've been about cryptocurrencies. Curious to get your take on where we are at now. I had Mark Yusko on last week saying, hey, looks like the bottom is in for Bitcoin. How do you see it?
I see Bitcoin sort of testing 20,000 all the time, getting a lot of resistance there. Seems to be holding the 2023 area. Still very profitable for Bitcoin miners that are currently mining at about 7,000 per coin at scale. And so there has been a knee-jerk reaction against Bitcoin miners lately because of ESG concerns, but they're also self-correcting by getting into nuclear and hydropower, which is plentiful in some countries like Norway. Now, crypto itself desperately needs policy. It needs regulation. And there was a bill just 2 weeks ago that was contemplated being pushed through, not on Bitcoin, just stable coins as payment systems. And as you know, that's been a very volatile area. That bill, that initiative, has been stalled till September, but I think there's a 50-50 chance that we will have policy on basically stable coins tied to the US dollar. And let me explain specifically why I think it's going to happen. There is a turf war going on between the SEC and every other regulator as regards to crypto, NFTs, tokens, all of this stuff. And so the smart regulators, the policymakers, are saying, well, wait a second, let's pick one outcome. Let's just do payment systems, just like a credit card, a Visa card, or a money market fund, which has very limited flexibility in terms of what you can hold in it, basically T-bills and dollar-for-dollar cash. Same thing with a payment system like a stablecoin. If that policy comes down, let's say it gets done in September, that's a signal to the market that we're starting to break open the logjam on policy making. And I'm very, very optimistic. In fact, on August 3rd, I'll be addressing the bipartisan legislature in Colorado, on specifically in Denver on this issue. Very rare to get all of the policymakers in one room, both sides of the aisle and their staff. This is what they want to talk about, the digital economy and policy on digital currency. I'm one of the people going there to address them. I'm very proud to be doing it, but the point is they want policy. We're finally getting something to happen here, I think.
Yeah, and I know you've been saying this for a very long time, but specific to your holdings, Kevin, what's been your personal strategy with the cryptos, with this down period we're in? Have you been adding to your position? Have you stopped? Are you good with what you have? What's your take?
No, we took a hit. We were at 20, and then it grew up to 23%. Then it went down to 16% of the portfolio. I mean, it was really volatile. But I've always said you're going to get this volatility in an ASN industry that's not regulated because there's no institutional bid. So probably at the low, we're at 15%. We lost, 40% of the value. And now we've come back up on some projects, and they haven't all come back at the same pace. The big players, the big market cap names like Bitcoin, like Ethereum, like Solana, like Polygon, HBAR, in some cases we doubled down. We took advantage of the extreme volatility in the large cap names like ETH and like Bitcoin. Why not add to the position if you're going to stay long? But, everybody trying to manage this space, I don't care who you are, if you tell me you made money in the last 90 days, I know you're lying. You've lost money and you're just averaging down, hoping for this to climb back up. If you'd own these positions for more than 2 years, you're basically in a break-even situation. So this asset class is not correlated with anything, as people thought. It's not correlated with inflation yet, but the real problem, and every time you and I talk about this, it's really a gauge on where the institutional buyer is. And right now, zero. They have no Bitcoin. Anybody that tells you the institutions, the sovereigns own it, is full of poo-poo.
Kevin's view on Jerome Powell is nothing but good. In Kevin's opinion, Jerome Powell has been doing a great job of threading the fine line between curbing inflation and preventing an economic crash. Kevin notes that although the Fed has raised interest rates multiple times, interest rates are still at all-time lows. Lastly, Kevin O'Leary points out how almost no one wants a job despite the plentiful amount of job openings in the US. In this interview, Kevin O'Leary first noted the Build Back Better bill. According to him, adding such a massive amount of money to the economy could do more harm than good. Kevin also downplayed the recession that could happen in the US, saying that a soft landing is possible due to high employment rates across the US. Kevin also says he would prefer to stay long on stocks instead of doing the much more difficult task of timing the market. Lastly, regarding Jerome Powell, Kevin says he is doing a decent job as Fed chair. Kevin adds that although the Fed has spiked interest rates on more than one occasion, these rates are still at all-time lows compared to previous ones. What did you think of Kevin O'Leary's take on inflation? What should the Biden administration do to properly combat inflation? Give us your insights in the comment section down below. If you enjoyed this video, kindly like and subscribe, and we'll catch you on the next one.